All right, it's time for us to get into our interview, expanding the funding base for Nigerian startups. And a lot of MSMEs are, within the startup environment. Okay. Let me just hold my fire. Samuel Okwuada, the founder at Remedial Health, is joining me right now. Hello, Samuel.
Hi, Nancy. Thanks for having me.
Hi, Samuel. How are you? You're beaming with smiles now, and uh, unlike the last time we spoke, I must say congratulations. Your company, Remedial Health, raising $1 million. In fact, my head has done the mathematics already. If I take a look at the I and E window, 460 million naira. But the parallel market rate, close to 600 million naira, your company has raised. So congrats, Samuel. Congrats, at least joining the
Thank you very
likes
much.
of Flutterwave, Paystack, and those guys there. So congratulations. We're looking at,
Thank you.
yeah, we're looking at expanding funding base for Nigerian startups. Where should we actually start from? I would want to start this interview by saying that the prospect for funding has increasingly grown. Do you agree with me on that?
Yes, certainly. So I started entrepreneurship in Nigeria maybe 10, 12 years ago now. So definitely the funding environment then where we tried to raise funding and someone was going to give us 40 million naira for about 70% of the company is much different from today, where even Silicon Valley investors are interested in African startups, especially technology startups.
Mm. Okay, so you got into business 10, 12 years ago, and your company now, Remedial Health, 2019, you founded it in 2019, and fast forward to 2022, you're getting a funding of $1 million. What changed between that time and now? I know you said, okay, many years ago, someone wanted to give 40 million for 70%. So what really changed between then and now? And does it really apply to other startups or some of your colleagues in that sector?
Okay, so Remedial Health actually started business 2020, so after COVID. Well, registered 2019. We just started working on the idea then. So the difference between the two mainly would be one, a lot of people are now interested in technology, either as employees or as founders, right? And when everyone, and again, everyone has noticed how big the market is in Africa, of which Nigeria is currently leading the pack in terms of funding. So with that, you expect more people to be interested in the market, and it's only going to increase, right? So last year we were talking, what, $1 billion plus flowing into Nigerian startups. We think this year probably 3 times or 5 times that figure. So one is an increase in the number of companies being formed. Two, investors are getting more aware of how big this market is. And again, the population figures support that as well. So definitely, would even continue to increase. And that has been the major difference between now and I would say 10 years ago.
Mm. Okay, what particular sector around that startup environment is getting the attraction of funds? What particular sector? Because there are sectors also within that startup environment. You have agric, you have the core
Yes.
IT, you have health, which you are into, and that health is also broken down. There's the pharmaceutical part of it. There are also other part of it, the blood path, and all of that. Samuel, I can see you're nodding your head. I know these things to forget.
So
Perhaps I will come to join you guys. So
overwhelmingly, it's been fintechs,
sorry.
right?
Yes.
So financial services.
Yeah.
And the reason is mainly Africa has a young population.
Mm.
These young population need to be able to transact. So make payments, transfer payments, whether within Africa or within Nigeria, abroad. They need to be able to pay bills. There's also a huge population that is unbanked. So people who are not currently using any of the legacy banks. So it only makes sense that fintech has gotten the most so far. I think somewhere upwards of 60% at this point.
Okay.
Right? But there are other sectors. There's agri-tech, there's ed tech, which is education technology. There is health tech, which Remedial Health is in. And we've gotten our own fair share. I wouldn't complain. It would only increase. That is the thing. Fintech is an easy industry for investors to understand. And that is why, again, it's getting most of the glory at the moment. But other sectors, I imagine even this year, would take a chunk of that 60%.
I can imagine that fintechs are the ones getting the largest share right now within the funding space and all of that. Why? One of the reasons which you said is easier to understand, and investors take a look at the bottom line. So it's quick, whether it's even quicker to make money, and it's even quicker to explain than for people like you in the house to say, oh, this one, okay, like that. Do you even have data? How many hospitals do you have? How many pharmacies in Nigeria do you have, for example? So I guess those will even be some of the challenges that your sector might be facing there. Now, let us bring it down. Run me through the funding process for startups. You know, run me through as a startup or for someone that, a Nigerian that is listening to us right now, that has no clue. Run me through the funding process as a Nigerian startup.
Okay, so first thing is an idea, right? For any business, it's what is the idea? What is the problem you want to solve? There has to be a problem you're trying to solve. You can't just wake up one morning and start a business that does nothing. Yeah. Now, the first thing again is to get started, no matter how small, especially for African startups. In the US, we've heard of people raising money with just an idea, right? People forget to say that one, that's the US, most likely Silicon Valley. Two, those founders maybe have one or two exits under their belts. So you have to be able to start, no matter how small. And that is what in the startup world, they call it validating your idea. So you're checking that this thing you want to actually do makes sense, and there are people who want it. Yeah? So you get started. The next thing is to search for funding. Now, in the ecosystem at the moment, we have a bunch of venture capitalists, so VCs. We also have angels. Now, I'm talking technology specifically. That is the industry I'm in. And you have to be able to put that idea and that business in a simple to understand format where anyone can easily see how you are going from 0 to 100 to 1,000 to 1,000,000, right? And you have to be able to communicate this. So one is doing either a business plan or a deck. So what is called a deck is basically like a presentation, basically showing this is what this business is going to do. This is the problem we're solving. This is how we're it, and this is the unit economics of this business. And then you have to reach out to these VC firms or angels and get them to review your deck. Now, if it's interesting to them, they would make you an offer to invest in your company. That is basically the way it works. And in that case, we typically call that a pre-seed. In some cases, people do their pre-seed from family and friends. So usually, who are the people who would trust in you in the first place before you ask outsiders to do is people who are close to you, family and friends. So typically, startups will raise a pre-seed round from family and friends and then go on to raise from angels or VCs.
Okay, so now that you brought me to that, let's talk about, you've talked a bit about pre-seed funding. Pre-seed funding you can get from family and friends. From pre-seed, you graduate to seed funding. Then you get to,
yes.
What's the next one, Series A? if I'm not mistaken, Series A, Series
Series
B,
A.
Series A, Series B, Series
So
C, Series D,
there
or
are
something.
the,
I
the,
don't know if you
the
can even go beyond that.
nomenclatures are a lot.
Yes. So can you talk to me about the financing models from Series seed funding? Now that you've talked about seed, pre-seed.
Yeah. Okay. So again, these are just naming conventions, right? You can go and name, you can raise any amount you want and give it any name you want to call it. Typically, it's called a pre-seed round, a seed round. Then you graduate to a Series A, then you have Series A, Series B, Series C, for as long as you want to keep raising money. And then there's also the IPO path, which is you're a publicly listed company now. So for a pre-seed, it is assumed that business hasn't really started. Maybe you're still building that idea, right? The business can still change. That is typically pre-seed. For a seed round, it is assumed that you've gotten some sort of traction. So business has launched, you have a little bit of traction. Now you just want to really show that, hey, maybe I've proven that 50 people need this thing that I've built. Now I need to show 1,000 people need it. Then you raise a seed round. Now you graduate to a Series A. A Series A, it is assumed at that point that there is an established business. You are doing things properly. It is, in most cases, is no longer you and maybe co-founder. You have a team supporting that idea. In fact, it's no longer an idea, so supporting that business, right? And then you're looking for money to basically expand. That is a Series A. Then a Series B basically is you are now a matured company. There is a product, it is solving a major problem for many people. The business has good revenues. Now you just need to scale it. Maybe, for example, you want to take that business across Africa. You want to go to multiple countries, for example, then a Series B. And then you raise more as you need to scale that business.
Okay, is there a threshold? Is there an amount that is a threshold for the different investing rounds? Like, for example, if we take a look at what Flutterwave did, or even Paystack, okay, Stripe, was it 2020 in the COVID year, came in with $250 million for Paystack. Flutterwave now has a unicorn status of over $1 billion valuation and all of that. Is there an amount of money that is a threshold within those investing rounds, or it's infinite?
Okay, so at the beginning of the last question, I said these are just naming conventions. So they are not fixed. Someone can raise a $50 million round and call that a pre-seed. It happens.
It depends on
it
what the
happen.
business needs at a particular time.
Sorry?
It depends on what that business needs at that particular time and how much that business has the potential to grow, to also get more money to grow.
Yes. And your ability to convince investors that we need for the business to get to the next level, right? So in some cases, you would see a Series A of $2 million. In some cases, you will see a Series A of $100 million. So it just depends on, one, the nature of the business, the market that business is in. So for example, in Nigeria, it is just assumed that if you are raising a seed round, it should be somewhere below $5 million. No one sets that, but it is just assumed because that is what we've seen with multiple startups in the industry.
So at what point of this investing round is most challenging? Or does it differ based on business by business case? At what point of this investing round is most challenging, really?
So we are currently at seed. So maybe I can only speak till seed, although I've been hearing rumors of a Series A. I would say Series A is more challenging because then you're growing from would I say, small project to an actual business. You're bringing in established venture capitalists who would, one, want to do like a thorough due diligence process, checking your books, making sure everything is perfectly fine. It's just by the nature of Series A is established investors that put in money, not angels or small VC firms. So that is the more challenging one to do. But typically, a pre-seed, a seed round is just all about convincing people. Again, remember, the investors are a pre-seed or a series or a seed round are not really looking at numbers at that point to make a decision, right? So the business might not have big enough revenue at that point. What they're looking at is, one, maybe the team, what market that business is in, the opportunity in that market, and where they think that business can grow to. That is pretty much what investors are thinking of when they are investing in pre-seed and seed. Okay. So yes, the more easier ones to do.
Okay, Samuel, let's get a bit more pragmatic here with perhaps for startup founders that are listening to us right now and don't really have an idea of like, okay, Samuel has gotten, or Samuel and his company has been able to raise a pre-seed capital of $1 million. Where do I start from? Where do I go to? Should I go to the guys in Yaba, or what kind of connection, do I need? Where should they start from? I know you've talked about it earlier, but if they have all those kind of stuff in place, can you just give us an idea of the process, of how to begin to raise this fund? Because we're talking about millions of dollars or even millions of naira.
Yeah. So I would say the best way to start is be part of the ecosystem. So don't try to build in isolation, especially when you're building a technology startup, right? Get yourself into the network. Now, there are a number of tech events that happen. There are a number of accelerators. So these are basically businesses that help other businesses to get started. Apply to those. Try and get your startup into one of those. 3, reach out to people. We have a few people that are invested in our seed round, basically from just sending them a message on our deck to explain what our business is. So feel free, reach out to people. 4, I would say get advisors. I know some people usually say, what do you need an advisor for? But typically when you're getting an advisor, these are people who already know who to approach in the industry. They can make your path a lot easier just by doing an introduction via email saying, hey, check out what this person is doing. It's as simple as that. So reach out to people, talk to other founders, send them messages. We're used to receiving and sending messages, especially as technology founders, right? Especially LinkedIn, Twitter, email. So send out messages and then you go from there. You would certainly, with some persistence, be able to get a few people to take a look at your business.
Okay, now that you've answered that question, what should startups understand, or what should startups get right before fund searching? How should they clean their house, before fund searching? Because you've got to do things right before you fund search. Like I said earlier, when I was answering a question earlier by one of our fans that sent in a question around MSMEs. A lot of MSMEs or startups, start by just one founder or 2. Some are not formalized and all of that. Some are semi-formal. So what are the things that you need to understand and put right before you go fund searching?
Okay, so one of the first things, whether you're a tech business or any other type of business, is you have to formalize. That's the first thing. You have to separate the business from yourself, right? That's number 1. Number 2, definitely separate business account from your personal account. Anyone who wants to invest would immediately, first questions they will be asking is, where are you registered as a business? Are you even registered as a business? Do you have a bank account? Can I see an account statement of maybe how money has come into the business and how well the business is doing? Or are you using it as your personal piggy bank? Right? So they would definitely want to know those things upfront. So whether you're technology or any other type of business, those are basic things that you need to sort out. Then you have to be able to bring in people who can help, either as employees or as a co-founder, especially for a technology business. People hardly invest in single founders. We've seen a few, but you would be maybe 5%, right? So you need to be able to bring on board people that can support that idea to turn it into a business. And again, that is what investors will be searching and asking for. That, hey, if you can't invite or if you can't get someone else to join you on this business, you can't convince someone to join you, why should I think that you can operate this business or you can do well at it? So those are the initial things that you need to be able to do. Then there is product market fit. In tech, we normally refer to that as PMF. Basically, it is the point where your business is solving a problem for people. Even though you have an idea, you think it is going to solve a problem for people, the fact is, if you haven't gotten that business in front of people to actually pay money, then you don't know if you're solving a problem. So you have to be sure that that business is solving a problem first before you go searching for funding.
Okay. How are valuations in the startup sector done? I'm really keen to know how valuations are being arrived at. I know it may differ,
Okay, so
but whether there's a general principle.
Okay, so for different industries, there are different ways valuations are calculated. For example, if you talk to someone working in private equity, they would give you a formula on how to determine the valuation of a company. If you also talk to someone at a late stage venture firm, that's a VC, maybe those that invest in Series C, Series D, Series E, they would give you a formula as well. Now, for pre-seed and seed companies, valuation is usually determined mainly by, I would say, the team, the idea, and the person who is listening to your pitch. There isn't a formula to it. You can have a good business, have a good team, but when you start talking to people and you're saying, hey, valuation should be $10 million, they will tell you, no. They're probably looking at the market conditions. They're probably looking at where do they think this business is going to grow to, and basically the market opportunity. There isn't a formula at that stage.
Okay.
Now, Series A, I would say there's also no formula for that. Again, it is what the people who want to give you money think this business is worth. You can give them an opinion and say, hey, I think my business is worth $100 million. But if you have no one taking it at $100 million, then you know, okay, I need to lower that valuation so that I can bring them on board.
Okay.
Series B, then you're dealing with the late stage VCs. They have a formula to then calculate, hey, based on your revenue, based on the market opportunity, this is what we think this business is worth.
Okay. Just as we close, do you think or do you see a bubble in the startup ecosystem? Because I've also heard some analysts say this could just be a bubble. But do you see it as a bubble? And the other part of it, which I'm also looking at it, that it could not be a bubble, or it may not be a bubble, but it could also be a growth prospect. Where do you stand? Is there a bubble that it may eventually burst? Or is it about the prospect of growth?
So I don't think there's a bubble. there is a proliferation of startups and people who are building startups. So it's only right that funding should come to those startups. Investors, global investors, are looking for the next frontiers, and Africa is pretty much on their radar. Now, as of last year, we were talking not more than maybe $3 billion that came to African startups. Is a small figure compared to, for example, the US or the UK, for example. That money is probably raised within 2 or 3 weeks in the US. So we're far from a bubble, very far from a bubble. This whole startup ecosystem and VCs and funding coming to African startups is barely 5 years, right? We've been doing technology for a few years, maybe 10, 15 years, but this whole thing started maybe 5 years ago. So
Okay,
I don't
Samuel,
think we've gotten to the peak.
Samuel, if you can hear me in just like 25 or 30 seconds, I didn't want to allow this slide because we're also seeing that the financing or even these monies are also coming from those abroad, or mostly those abroad. Is there a way that we can also have local investors, all these high net worth individuals? Are they also quite keen or interested in that in the startup environment?
So we have some local investors. We have some Ingressive Capital, Ventures Platform, Voltron Capital. I can name quite a few, and it will only increase. These are people who were in the ecosystem for a while, made some money, and then are able to invest in startups. We're also seeing founders investing in startups. So I'm investing in startups. A bunch of founders are investing in startups, including Flutterwave that you talked about. The CEO of Flutterwave invested in Remedial Health. So as these founders are building big companies, getting some exits, they will begin to invest in startups as well. So it will only increase.
Okay. Thank you, Samuel, for joining us today. I wish you well. I wish your company well. And very soon we will announce that you have more in terms of funding. Thank you. Thank you, Samuel.
Thank you.
All right, I've been speaking with Samuel Okwuada, who is the founder and the chief executive officer at Remedial Health. We've been looking at expanding the funding base for Nigerian startup ecosystem. That's the much we can take on today's edition of the program. Thank you all for joining us today and joining us this week. Please join us again next week, bright and early, on African Independent Television. Moneyline with Nancy is the program. Be the best you can be and be that change that you want to see. I am Nancy Naji. Bye now.